Hello and welcome everybody. SF Live episode 180. Happy Monday. It is another Monday. It is already May 10th. Time is flying. It's crazy. And we are hosting episode 180 already today. So I'll be joined in a few short seconds by Lobo Tiggre. He's the editor, publisher, and he calls him chief dishwasher as well at the Independent Speculator. I'm excited to have him on. Very timely. We're going to talk about breakout in gold, breakout in silver, a massive copper rally, uranium marking higher prices. Lots to talk about. What is triggering that? Of course, I want to ask him a bit about Basel III, see if he has an opinion there. I'm trying to learn more about it myself, so any input is always appreciated. And of course, this is an interactive format, so please be reminded to use either the hashtag AskLT on Twitter or YouTube chat. I see we already got a question in, so make sure to use that as well. Also, make sure to follow us on YouTube and Twitter. I mentioned that before. You probably get tired of hearing it now, but turn on the notification as well. We do all our interviews live. That way you do have an advantage when we talk about stock tips, when we talk about breaking news specials, when we have CEOs on and you hear something that you weren't aware of before. Make sure to use that to your advantage. Also, real quick, I just want to highlight that. And we are hosting Deutsche Goldmesse on May 24th and 25th. That's the German gold show. And we've got an excellent lineup of speakers. 10 speakers, 28 companies. You see the images here. We got Ross Beatty, Lee Courier from the uranium space, some really prominent German speakers, Mark Friedrich, Professor Dr. Thorsten Polleit, one of Jeff Curry's at Goldman, ex-analyst, and he's an advisor on Bitcoin right now, Josh Crumb presenting. Make sure to register for free, deutschegoldmesse.online. I'll mention it also in the YouTube link description as well, so make sure to do that. Now, I wasted enough time. Let me switch over to our guest. Lobo, thanks for joining us. How are you? Thanks. Yeah, as I said, thanks. It's been too long.
Thanks, Guy. I'm happy to see you again, if only virtually. Much more fun when we're out in the field kicking rocks, but
soon.
Life is beautiful. Business is oddly great for this strange time in the markets we're in. So happy to do what I can to help your audience.
Yeah, fantastic. Let's talk about it. I mentioned it in the introduction, like lots to talk about. The market is making it very easy for us today to talk about and find some topics to talk about, right? But before we dive into that, like it's your first time on SF Live, and we always like our guests quickly introduce themselves, and then we'll dive, of course, into some details. So who's Lobo Tiggre, and tell us more about the Independent Speculator.
Well, thanks. That's a great question. I should perhaps start by saying that Lobo Tiggre is also known as Louis James. That was the pen name I used when I wrote for Casey Research for my mentor, teacher Doug Casey. For about 14 years at Casey Research, I worked at his international speculator. And by the way, when I named my service the Independent Speculator, that wasn't a ripoff, that was homage. And I checked with him and he gave me his blessing. So, I'm tipping my hat to my teacher there, and hopefully, onward and upward from there. So yeah, you may recognize me. I used to have very long hair back in my Casey days, early Casey days. Yes, you're not crazy. I am also known as Louis James. Transparency is really the hallmark of everything I do. I have a track record that's not just theoretical. It's actually all my closed trades, including, broker fees and everything. And so I just figured, a pen name didn't fit with the idea of going fully transparent. So my real name is a bit strange, but it is what it is. And here we are.
Fantastic. No, I really appreciate you, running us through some background as well. And maybe we'll start there with a bit of history before we dive into what's happening in the markets today. But what are some of the philosophies you actually learned at Casey Research that you've moved over or took with you to the Independent Speculator? How does that fit in?
Sure. Yeah. Well, lots of things. Philosophies. I would say that by being the black sheep of the family, the atheist, anarchist, rabble-rouser that I am, that's actually what got me together with Doug. And that may sound like not a very useful thing to say to broader audiences out there. But actually, I think this is quite important. Doug, before me as well, others that I respect, Rick included, we're not Republicans or Democrats. We're independent. There's that word again. I'm a libertarian. And that helps, actually. I don't see that as a problem to be in such a tiny political minority. It gives us a perspective that we're not inside the echo chamber on the left or the right. And for investors, I think that's really important, since the mainstream, both sides of the mainstream are so powerful, and they shape everything we hear and see. It's really hard to separate the noise from the signal, to tell the bullshit from what really matters, what's important, and having a different mindset. You don't have to agree with me, but if you have a different mindset from the mainstream, I actually think that's helpful for separating out the fact from fiction that's delivered nonstop from the mainstream. So I think that's really important. In terms of more practical takeaways, the quick pointer would be Doug Casey's famous 7 Ps when I started, then became 8 Ps. I think it's 9 Ps now. Whatever. If you do a quick Google search for Doug Casey Ps of resource stock evaluation, you'll find a free report, not mine actually, Casey Research's, and it covers the basic steps. And that absolutely is the takeaway that I took. And the first P is people, of course. And that's a prime determinant in what I do today, right? If there's people that have disappointed me or lied to me, failed spectacularly for shareholders in the past, I don't care what project they've got now. That's something that informs my view.
Okay, no, that makes a lot of sense. And there was a joke in there: the older you get, the more P's you have, of course, right? So, sorry, I just had to since this is a live podcast, I just couldn't bite my lip there. I just could not do it. But no, it makes sense. And people, projects, all of that factors in. And as you said, I think being a libertarian when you're an investor makes a lot of sense, because you hear both sides, and you got to come up with a thesis that is not tainted by either how do you call that, story. Right, so I can see that, and how does gold and silver fit in? Perfect segue there, right? And is that your only thing you're looking at?
So of course they're very famous for being hard money advocates, fiscal conservatives as well. But for me, it's pretty personal. I've written about how there was a time when I had a personal financial meltdown, and it was my childhood coin collection, my silver, that actually enabled me to feed my family in that most dire extreme. And the funny part of the story and how it relates to everything today, is that a lot of that silver at that time was Mexican silver pesos. And the peso had been devaluated, inflated so many times, like so many zeros cut off from the peso. Like if you had a paper peso from when I had these coins in the 50s and 60s, it would be basically nothing. But at the time where I needed money, my silver pesos, they weren't actually like silver dollars. They were like circulation coinage that had some silver in them. And it's very funny, but true story. They gave me at the pawn shop, they gave me 1 peso for each one of my silver pesos with a little bit of silver in them from the 50s and 60s. And at the time, they had just cut a bunch of zeros off the peso. So 1 peso was a lot of money. And, I was able to turn in my stack, and I was literally able to go to the store, buy food for my family. Obviously, the very last thing I wanted to do. So this thing is not just theoretical or some intellectual issue for me. It's visceral. Maybe that makes me less objective, but I think it also gives me holding power when we see these fluctuations or manipulations or whatever other crazy things going on. I remember that. This is real. Gold and silver are real money to me, and I suspect to much of your audience too.
I actually just bought some silver coins the other day, silver quarters. I was in a pawn shop and I saw those there. I was like, okay, I have to buy those. Those are like from 1960, 63, 62. I bought some 57s, and I think I found one from 1940 or 41. So just bought a few. I wouldn't call it a raid. They had some left when I left. So, but I definitely bought some silver coins. So I'm hoping they might be worth something eventually. So I think that quarter's already worth $6. So.
When I was a kid, you could go through rolls of pennies to look for real pennies with copper in them, or you could go through rolls of nickels and dimes to look for real ones that actually had silver in them. But it's been a long time since I've seen one in circulation, and hardly anybody uses cash anymore anyway. You're always paying with your card or your phone or whatever these days. So that's kind of a lost art. But yeah, I have some what we call junk silver over here somewhere. In case I ever need to make small change in a world where metals go back into circulation, it's nice to have a bag of pre-65 U.S. silver on hand.
Yeah, exactly. And that's the reason I bought it, a bit of a nostalgia. I think they're actually worth $6 a piece nowadays, so which is quite interesting. So,
yeah.
But I'm trying to find the segue now to talk to today and what's happened the last few days in the markets, especially gold, silver, copper, and uranium. We're also going to talk about it, but let's focus on gold and silver first. Well, they both broke out, right? Gold is at 1840 right now. Silver is, I haven't checked actually this morning, around 2750 last I looked at it, I think. And that's a breakout in my opinion. And it seems like it was a delayed breakout. Like we've seen CPI numbers like at 2.6% inflation, but that was like 10 days ago. Like I'm wondering, like, the market is always foreshadowing something, right? It's not that we're reactive to market events, right? So what are we seeing now in the market? Like, why is gold and silver moving now, not 10 days ago? Like, what is happening? Give us some color.
Well, another takeaway from Doug Casey is you really can't sweat the daily fluctuations. And sometimes Mr. Market is just a cycle, right? He just does the wrong thing or he has a bad day, and there's nothing you can do about that. Now, what does that mean? That's metaphorical. I mean, it means that the market is millions of people, each one with their own criteria, their own decisions. And some of those feed into the traders who on the COMEX and the futures or London, the traders who actually are buying and selling gold and silver in the way that's most easily and visibly quoted. And sorry, quick digression. People who agree with our general outlook, they often, wish that we didn't have these futures markets at all and that we weren't looking at paper gold and paper silver prices. Why do we even look at this stuff? We want to look at the real thing. Well, the reason why we look at those is because they're electronically available instantaneously. The COMEX futures are quoted, millisecond to millisecond. That information is available. If you say that, my price that I pay at the local coin shop is more real, well, I'd agree with you. But who has that data? Right? How do you amalgamate, you or me or Mrs. Chang in China or Mrs. whatever in India buying gold on, at their local shop? There's no data on that. So we use this convenient data, even though it's paper. And that stuff, it's driven by algorithms, trading heuristics, and all this stuff in the market. So frequently kind of crazy. And the crazy of the year, to get to your question, is that that fears of, expectations of, talk of, headlines of higher inflation has been somehow perversely bearish for gold. Why? If gold's an inflation hedge, makes no sense. Well, you and I know that. But these trading algorithms, they see higher inflation means higher rates. Higher rates are bad for gold. And it's like a knee jerk, but it's more like a silicon chip jerk reaction where it's programmed in this way. And so I do think that the delay makes a kind of perverse sense, like as the reality stepped in. It seems to me, I say don't sweat the daily fluctuations, but I look at them. And you look at the charts in the last week or two, and there's been times where it looks like there's this immediate computerized reaction. Oh, rates jumped up, gold jumps down. And then it's like the humans step in and say, whoa, wait a minute. This is wrong. And so like famously last Thursday, right, there was that, rates fell off a cliff, gold jumped up a cliff, and then rates came back. But gold held on. And that was really interesting because normally you would see, it's like a Rorschach image, right? Gold and rates inversely relating. But it looked to me like humans stepped in and said, whoa, wait a minute. The reality is here that these numbers are very bullish for gold and silver. And so they put the brakes on the algos and gold held on. And I think that's what we're seeing. I can't prove this, but my take on looking at the day-to-day data that we're seeing is that people are starting to see the writing on the wall. People get that higher inflation actually is good for gold, and that real rates, which are the most powerful, not the only, but the most powerful driver in gold and silver over the last 50 years, will be on gold's side, certainly this year.
I think we're expecting CPI numbers again this week for April. So I think May 13th is the date I have in my head that we're expecting more numbers. I'm really curious to see what they look like, especially with all the agricultural commodities just exploding, which is crazy to see. Like lumber, of course, everybody's talking about lumber these days, but also copper is rising. Corn, I just saw corn explode. Hog halves or whatever you even quote them in, like are exploding, right? It's like yeah, exactly. All of this, like I learned the other day, like at a restaurant, like, well, chicken wings are rare, and there's a chicken squeeze. Okay, so when the hostess said, well, we got $1 wing specials, like, what happened to the 25-cent Hooter specials? Like, what happened, right? Like, well, that's 400% or 300% inflation right there, right? But apparently there is a chicken squeeze going on as well. So it's really interesting to see all of that. Friday, we got a jobs report as well. I think that just added fuel to the fire, people understanding maybe that QE money printing won't stop tomorrow. Is that true?
Right. And that's one where, our perspective, our independent perspective helps. Like we didn't believe that narrative anyway of, oh, the Fed's going to be forced to raise rates sooner. I don't think any of my readers, and probably very few people in your audience, really believe that. But the mainstream out there and the traders that push the paper prices around, that's the standard response. If inflation starts heating up, rates have to go up. So that's how they were betting. That's how they're programmed. I think the people are programmed even by that perspective. And so, yeah, the jobs report was very important. People were expecting 1 million new jobs. It looks like we have this great recovery, and that would put pressure on the Fed to dial back. And so then this report comes out that the number is way small. It wasn't just a small miss or even a large. It's a huge miss. It's like a 3/4 miss. They expected 1 million new jobs, and they got a little over 1/4 a gigantic miss. And of course, everybody, the powers that be were all out there making excuses, and there are jobs, but people are worried about COVID, and there's no childcare, and all these excuses. It's fine. Even if those are true, it doesn't matter. It was a huge miss, and those excuses say that the recovery is not hunky dory. So yeah, it makes sense that the mainstream will say, well, wait a minute. So the Fed's under less pressure now. And that's bullish for gold. The big question really, and we could talk about this all day, Kai, but I think that the main thing on this subject or this area for people to focus on is this transitory issue of the year-on base effects. And that is real. Like, statistically speaking, that is true. They're not making that up. That really does happen. And if April of last year was the bottom for this number, and the comparison compared to that bottom, it's objectively, you could say, it's fair to say that's not representative of what we're experiencing this year. Fine. But that doesn't mean that you can ignore what you're talking about, the chicken squeeze and copper squeeze, uranium squeeze, all these other squeeze. You can't ignore the fact that prices in the real world really are going up. In fact, as you and I speak, I'm on the verge of publishing a paper that will be available for free at independentspeculator.com called Real Inflation, where I'm looking at some of these issues. But what I want to tell people is, when the number comes out, the powers that be are going to do everything they can to say it's not real, don't worry about it, it's transitory. And they will have some reason on their side. But that doesn't mean, as you just said, as we all know, it doesn't mean prices aren't going up. It doesn't mean there's no real inflation. And the more that reality asserts itself, reality does matter. And, I think that is extremely bullish for anything real, but particularly monetary metals.
You can't argue it away. Gas prices are going higher. People see and feel it every day. There's it's tough. Like, I think the narrative has changed. I think people are taking over some of that narrative now, and they won't be dictated anymore what to think. It seems like in the news, and I'm hearing more and more of that, right? And just people
You're an
see.
optimist. I hope you're right.
Yeah, it's like, well, the people see a different reality, right? When they look at it, like everybody, like even talking to friends, like who are teachers, like they say, well, I'm worried about inflation. I do have savings in my account. I have cash in my account, but I'm worried about what is happening now. And they ask me, like, Kai, what do I do now?
Yeah.
Right? Like, what do you advise
really
your friends? Like, what do you advise?
Sorry. That's. Let me focus on that a second. Because that's really interesting. The way, like, I feel sorry for Powell and these guys. They've got to get up there and spout nonsense. I think they know to some degree that they're, at the very least, they're putting the most positive presentation they possibly can. But the one that really sticks in my craw is where he says, oh, expectations are well anchored. No, they're not. I mean, you could argue about the CPI number and how transitory it is or whatever, but talk to anybody about their expectations. They're not well anchored at 2%. They are going through the roof. I mean, that's just wrong. I see no. I mean, you'd have to look at a very long-term average to say that inflation expectations are well anchored. So that's nonsense. As for what I tell people, it's mostly through the website because I'm here in Puerto Rico and I'm antisocial. I live in my fortress of solitude here. Everybody's got masks on. Nobody's talking to anybody. So yeah, I don't go hang out at a local bar and talk to people about the higher price of beer, though that is there too. So I can't really say what the thing here is.
I know. So I suggested to him like the SPR, the Sprott Gold Trust, maybe the PSLV as well, and of course, depending on risk appetite, certain mining stocks too, at least as part of the investment mix, right?
Right.
So my question also is like maybe in addition and adding to that as well, like how is your portfolio in your newsletter currently positioned? Like how are you currently playing this trend in precious metals and then also base metals?
Right. So I'm mostly gold and silver. I'm mostly gold. I've been trying real hard to add more silver, uranium, and copper stocks. But right now, out of 25 positions, I have only 2 copper plays. I have 4 uranium plays. A lot of the gold and silver is gold and silver, so I can't give you a very precise answer. But I would say it's more gold than silver. And that is not representative of my view as to which has the more upside. And this is stocks. We're just talking
Yeah.
stocks. The metals are, that's not a speculation in my view. That is another thing that I took away from Doug Casey, that bullion, physical metals, that's not a speculation. You buy those for prudence. It's savings. And that's absolutely something I took to heart. I save in gold and silver, physical. To speculate, that's what the stocks are for. And the problem, though, is that I have standards, right? The 9Ps now, and I'm not going to compromise on what makes for a truly great speculation, in my view, just because the price is going up. And maybe I'm a mutant. I just don't feel FOMO, I think, the way most people do. And I'm not going to just go buy everything with silver in the name because silver is going up, or everything with copper in the name because copper is going up. I still want value. I want a value proposition that makes sense to me. And I don't want to jump on after something's gone vertical. So I've been looking. I've been a bit slow to the draw. I'm happy that I have some, copper in the portfolio. One of those has done far better than I thought. I'm happy that I do have plenty of silver in the portfolio. I'm very happy that I have some, what I think are some of the best uranium plays out there. And I'm looking to deploy more, but I'm just going to be careful. I'm never going to compromise on my due diligence on what I think makes for a great speculation. Now, one caveat I would just throw out for the audience out there is that, I've been doing this for a while. I do have a portfolio, so it's easy for me to sit back and say, well, I'm going to wait for the market to come to me on what I want because I've already got a bunch. If I was starting out, if I was just noticing copper now or gold and silver now, and I was worried about inflation and wanting to harden my portfolio, I'm not saying throw caution to the wind, but I would be much more aggressive going long now because you also have that risk of things just taking off and leaving you behind. And if you have no exposure to the upside, then it is more, I think it's prudent actually to move quickly to add exposure in your portfolio to real assets, real and commodities count.
Now, let's talk about copper real quick because the copper price just exploded. It's just exploding. It seems like it's massively overhyped if you look at the price chart because it's going straight up. Like there's no arguing. It looks like a straight up line. We're at $4.85 per pound. How much of that is hype? And when you say like looking at the stock, like you might miss it, is there a way, or are you waiting actually for a slight correction to add a couple more positions? Like what is the ideal way to play this now? Because we went up so fast.
Sure. Well, actually, I think it's zero hype. I don't think it's hype at all. I mean, it's not like people are going down to the local coin shop and stacking copper. It's not a real practical.
I do have a
choice.
Copper bar in my office, though, but I've had it for a couple years.
You're going to fill up your garage with pre-1940 pennies or something, So no, I don't think it's hype at all. But I do think there is sort of extra juice in that space right now from the COVID shutdown. So you've got major supply issues from 2020 that contributed to copper's meteoric rise. By the way, it looks vertical now if you look at the long-term chart, which you have to go. You have to go back 10, 11 years to look at the previous all-time nominal high. And that makes for a long chart in which the tail end of the last couple of months looks like an absolute vertical streak. But if you look at a 12-year chart, or even a 6-month chart, it's not quite that vertical. Our current context of the last year or two makes it look a little less crazy. But anyway, what I'm saying is that there are specific issues. There are shutdowns in Chile. There's a new tax proposal in Chile. There are issues that are specific to the moment now that are adding to the supply deficit now, and that has put a squeeze on copper now. That's not hype. That's real. Now, it's not long lasting. COVID isn't going to shut everything down forever, we hope. But back on the plus side, the the structural supply constraints are lasting on a big picture. If you pull back again to the big picture, people are worried that Ivanhoe's Camor coming online is going to flood the market with copper. It's like the biggest new copper mine in 15 years. But that's all true. But if you look at the projected copper demand going forward, we need something like 5 more of these things like every year or so. But I haven't done this number myself, the math myself, but I've seen reliable sources that look at this. And the amount of copper that we need that is not yet coming online, it's much more than this. So the good news on this is that, sort of whatever happens in the near term, yes, copper's gone vertical. I'm hoping it corrects. I'd like to add to my portfolio. But whether it does, whether it doesn't, I think copper is one of the safest commodities bets for years to come. It's the kind of thing where if you pick a great company, they're making money, they can make money at lower prices, they're not going away. And you could buy that, stick it in a drawer, forget about it for 10, 20 years, and you'll probably come out ahead. So that's the good news. The nervous making news is that, well, yeah, it's gone vertical, and I got to tell you, it's hard for me to buy when I see that. It's hard, and you don't want to be the one it's buy low, sell high. You don't want to be the one doing the buy high, hope to sell higher method. So yeah, personally, I'm hoping for a correction. I'm looking for a correction. Nothing goes straight up forever. Even without a broader market correction, it's reasonable to think that there'll be a copper pullback, and that would be a good time to add to the portfolio. One more quick aside here is that there's also, I think, for all of the commodities, and even for the monetary metals too, which I think of as separate from commodities, there is potential for a market crash this year. I know that anybody who thought there would be another leg down after the crash of last year has been a bit of a chicken little on this. But I'm looking at the really extreme reactions to the tiniest hints from the powers that be about the markets and any kind of tightening. And, I'm not making a prediction. I'm just saying that there is the potential. I think even the people who are the most bullish for mainstream equities and the FANGs and all that, they all know that they're not cheap. They all know that valuations on Wall Street are high. They all know that, the market is very disconnected from Main Street on Wall Street. I'm not saying anything your audience probably doesn't know, but what I'm saying is that the data, looking at the market price action lately, tells me that there's a great deal of nervousness about that. And it might be that the whole thing just could go into reverse without, some Lehman Brothers event or anything like that. It could just be that people start saying, you know what, this is too rich. I'm going to take some profits, and that triggers more profit, and then that triggers the algorithms, and the stop losses kick in, and you could just have, for no reason, a major waterfall event, which would be a spectacular opportunity, because it would take the copper stocks down, uranium stocks down, even gold stocks down. Everything would get whacked in such an event, even the things that people should be buying.
Yeah, well, we saw that on Wednesday when Yellen. There was an interview published on Wednesday by Janet Yellen that was recorded on Tuesday, apparently. So some people apparently knew about it, but that triggered some nervous reaction in the market. That made her backpedal again quickly, right? So it's like, oh, this was taken out of context, but exactly what you were mentioning. The markets are super nervous, and it doesn't, as you said, like, might not take a bank falling down again, although somebody speculated on our program before that the Black Swan event, like Deutsche Bank faulting or just imploding, right? Could be a trigger like that, but good point. We've chatted for way too long already. Unbelievable. Time flies always. I just wanted to catch your thoughts on uranium real quick. You mentioned you already have 4 companies in the portfolio, so you're obviously almost more bullish, or at least you were earlier than with copper. What made you jump in, and where do you see us heading right now? And just give us a quick commentary.
So different strokes for different folks, Kai. And I was recently asked on another interview, what's the best early stage resource speculation? And if you phrase the question that way, what's best early stage? Hands down, there's no other answer but uranium. Why? Well, gold is still near nominal all-time highs. We all wish it was higher. We all think it should be higher, but you can't say it's, like $300 or whatever it used to be. Silver is not down in the $5 range or even the $15 range. Copper just went vertical. Nickel, lithium, a lot of things are up, but uranium is still below the average cost of production, way below the incentive cost that if you include cost of capital and everything else that's needed to actually pull the trigger on building a uranium mine. And it's irreplaceable. And I know that nuclear power is unpopular in many places, but that's turning around too. That's a big part of this story now. But even if it wasn't, even if the world does actually get rid of nuclear fission, uranium-based power plants forever, some decades down the road, that will take decades. And you can't just pour beer in there like you can the Mr. Fusion on the back of the time machine in the Back to the Future movies. You've got to have uranium. You will have to have uranium for many years down the road. And the data tells us that the secondary supplies are drying up. Prices have been actually rising, with volatility over the last 5 years. And it looks like they have also broken out this month. They're curving back upwards again. So absent another, really horrific nuclear accident, which would whack all uranium stocks, I'm not denying that. That's the danger here. But if you want something that's early stage, you want something that, the price almost has to go up, then uranium qualifies, because you just can't supply the market, which is growing, by the way. More plants are being built than decommissioned. Heck, even the U.S. administration, the Biden administration, is talking about subsidies for nuclear power now. And that tells you how strong this new green initiative is and how desperate people are to find, non-carbon emitting forms of power. So yeah, absent a giant nuclear accident, this is absolutely a when, not if question, and the when is arguably already starting, but it's early stage. So that, early stage, my favorite. But early stage isn't the only criteria. I feel that silver has more story behind it, more narrative. I call it the win-win-win metal of 2021, because you've got the monetary aspect, and you've got the general industrial aspect, and now you've got the new energy. It's also an energy metal now. So that's really interesting, and potentially, medical coming along too. It could be four ways. Gold is maybe, in my view, just the more solid one. And so there's different criteria. What's more important to you is maybe how you'll allocate more of your portfolio.
No, a lot of good. Like win-win-win. I might have to change the YouTube title. I like that part. Silver, the win-win-win medal of 2021. Might change the video title to that. So fantastic. Well, Lobo, I really appreciate your time. Like, we've chatted for 32 minutes now. We always try to allocate 25, so really, really appreciate you taking the time. I don't want to take any more of your time. Much appreciated. Where can people find more? Like, you already know by now, but I
thought we were going to take a few questions. I feel bad for the people that we invited to send in questions. But,
like we can ask a couple if you still have a couple more minutes. Yeah, like we got one question is your thoughts on philo mining. You interviewed them last year. A lot has improved since then. Copper prices is one of those stocks that has been running really hard lately, and it's been all over my Twitter feed as well.
Well, okay, maybe I shouldn't have invited for questions, because my general policy is I don't evaluate companies or give away my company evaluations for free. I have my more affordable service, not cheap. More affordable service is dedicated precisely to this. It's not my portfolio. It covers 400 stocks that readers have requested, and I give my take in my take. So it's not fair to paying customers for me to give that away. I will say that company is covered. And more broadly, though, I think this fits in the sort of interesting theme for today. There's a number of companies out there, a handful that have great management, big projects, and the sort of sweet spot here is they're copper gold stories or gold copper stories. And that gives you, a win-win sort of potential. I'm not going to analyze philo for you, but I will say there's a group of companies like this that I think deserve investor attention today.
No, what I can say, it's been all over my Twitter feed the last 2 weeks, 3 weeks, 4 weeks. So I'm sure a lot of positive comments out there. But maybe one other question, and we talked about different sectors, but the question is a little more pointed now. What is Lobo's most promising sector right now, and why? Like, if you had to choose one, like we discussed all like gold, silver, copper, uranium. If you had to choose one sector right now, which one would it be?
Well, I would stick with gold and silver. I mean, they're close enough that I would just say monetary metals. It's what I know best. It's what I'm most confident in. I mean, arguably, I should have gone into Dogecoin, right, this year. People are mad at me because I wasn't more bullish on lithium, or I wasn't more bullish on cobalt or whatever. But one, you can't kiss all the girls. And objectively, as far as the potential assets I could have bought out there, Dogecoin is the one that I missed the most. But I don't know anything about that. I don't know on what basis I could rationally have made a decision that this is the one before some billionaire goes out there and makes it popular. That's not a basis for rational speculation. I'm the independent speculator. I'm not the rash gambler. And yeah, I missed that big win, but that's like saying, hey, you could have bought the lottery and you didn't win the lottery. I'm over that.
No, it's like
So sorry, the point was, one size doesn't fit all, and what's best, if you don't buy the monetary metals thesis, if you think gold and silver are just other commodities like pork bellies or coffee, then if you buy that, then they're actually overpriced, and you're much more better off looking into copper and nickel maybe, and some of the other commodities that have not risen as much. Well, maybe not copper now, but anyway, so sorry,
yeah.
one size doesn't fit all. There is no one single. But personally, what I'm doing, I've just discussed my portfolio, and 90% of it is in gold and silver.
Cool. Awesome. I think, Lobo, we can wrap it up here. We've covered all the topics extensively. We didn't get a chance to talk about Basel III. I just looked at my notes. I forgot to ask you about it. Maybe we'll get you back on because it's a topic I want to learn more about it, and what are the implications for gold? Because apparently, I'm not even going to speculate because I'm just going to sound unknowing. I'm still learning about it, and I don't think anybody really has a clear vision of what it actually means for gold yet, because there are implications for it. So, well, I'll have to do some more reading. So,
Agreed. Just remind your audience that it's been postponed several times. Just one thing to,
there might be a reason
tuck
for
away.
that. So, appreciate it. Lobo, independentspeculator.com. You got your subscription models there. You got great white papers on there as well. Due Diligence Guy on Twitter, so make sure to follow him there as well. Really appreciate your time today. Much appreciated.
Thank you, Kai.
Everybody else, thanks for tuning in. This was SF Live episode 180, so really appreciate you tuning in. We had quite a few live viewers. Really appreciate that. Make sure to follow us on YouTube, follow us on Twitter, and don't forget to hit that bell notification as well. As we do all our interviews live, you do have, of course, an advantage by watching us live. We do interview company CEOs, analysts, and experts that share their top picks as well, so you do have an advantage once that comes out. And leave a comment, leave a like, share it with your friends. That helps with the algorithm, of course, and we'll be back with more interviews later.